Hello everybody, welcome to Stock Market Jimmy. Thank you for joining me today. Today is going to be a dedicated video to Symbiotic. The sticker, the symbol is SYM. Now today it hit $37 per share. This stock we bought for $27 per share, and we have 1,800 shares. So we are up $10 times 18. So we have 1,800 shares, and we're going to have $10. So we're up $18,000 on this stock, and we only bought it 2 weeks ago. So in 2 weeks, we're up $18,000. So not too shabby, but we did not sell. We are holding this stock. We are not going to have any motivation whatsoever to sell this stock. That doesn't mean that it's not going to have days that it comes down. In the stock market, guys, there's always what we call shake-offs. So they're trying to shake you off of your position. And usually that works for people that are up a certain amount of money and they really, really need that money. Now, if you really need the money, you got to take the money. It's just that simple. If you don't have buying power in the industry where you have enough money, it takes money to make money. So, yeah, sure, throughout my career, there's been tons of times where I was desperate to take the money. I had to have the money to have buying power. So, and remember this, that every time that you take money, it builds up and builds up and builds up. And that allows you to have X amount of dollars for free. So, for example, if we wanted to today, we could have sold this, had $18,000 profit, and then that $18,000 can make money, on other things. So, like if you look at the aftermarket right now, it's down 16 cents already in the aftermarket. So, I could, by tomorrow, this thing could be $35, So it's just hard to say. Now, what's nice about when you pick a stock, the more that the stock has the ability to go up, that's the reason why we didn't sell the stock. Because I asked myself a question: what do I see this stock being at in the next two years? And the answer is about $78 per share. That's about what I vision this stock to be. Could it be 98? Sure, it could very well be 98. So when I ask myself the question, do I ever see the stock being worth more than $37? And if the answer is absolutely, why would I sell out of my position if I only paid $27 a share? Why would I do that? I would literally just be throwing money away that I could have made on this stock. So you also have to ask yourself, am I going to be better off selling it and buying something else that I see that will also go up? So you just don't know. Sometimes you could have something where you think is a really good deal and something happens to the company. So there's never a guarantee, but we have to make the best choices that we can make, and we have to live with those choices. All right, now let me show you a quick video of what they actually do. So this is a video real quick here, guys. Let me pause this real quick because I want to remove the audio. All right, here we go. So basically, they set up robotic systems for warehouses, and they have all different type of equipment. They have software. They actually build those robots, and those robots pick up packages. It's basically an assembly line. They wrap the packages with saran wrap. So they're into anything related to warehouse, to speed up warehouse production. Okay, so it says 3 times faster. And that's basically what this is here. Okay, so we'll go ahead and pause that. and go back to here. So it gives you a chance to just kind of get an idea what they do. Now, is it too late to get into this stock? Of course not. Of course it's not too late. Now, another good thing that you can do as an investor, so let's say, for example, one of the things that would probably be smart for me to do is, let's say that this thing hits $42. Okay, let's say it hits 42 bucks. And let's say I sell it, and at that point, I take, let's say, around $25,000 profit. All right? So I take this $25,000 profit, and that technically could happen within a month of owning it. Take that $25,000 profit, you wait on a day that it dips, and then you buy 20, look at that, it just went to 37.18. So it's already got back the 18 cents. Oh no, it went way lower. Okay, that was a typo. So see how it's already dipped to 36.85? So you just don't know what's gonna happen. But keep in mind, this is after hours. It's gonna fluctuate here and there. So if you take that 25,000 profit and you only buy $25,000 worth the stock, even if you're paying, let's say it dips down to $35, and I decide I'm gonna go ahead and take the 25,000 or whatever profit, put it into the stock at $35 versus me buying it for 27 like I was able to, but now I have way less shares, but I would have $25,000 of free shares, and then I just forget about it, because at that point you're only investing money that was given to you. That is a very smart way to do it. So keep that in mind, that it's much easier for you to make investments where you're free rolling those investments. So in the beginning, when you're trying to build, yes, you have to sacrifice, and you have to kind of, you're just trying to do the best that you can, and do the best that you can, and make the right decisions. But this is definitely a stock that I think is going to do well over the next 24 months. I think that you will most likely, now I'm not a financial advisor, I'm just giving you my opinion, and I'm telling you what I'm going to do is I'm going to hold, and I'm going to wait until this stock gets up at least double my money. Okay, guys? So that's going to be it for today, a short video. Go ahead and hit that like button for this new channel, subscribe to the channel, and I'll see you guys on the next video.